Yo, 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 what's happening, people? What's going on? Just getting ourselves prepped. Got a bit of price action happening. So we're going to have a conversation about that. I've come on a little bit sooner than expected. Yo, yo, good evening, good afternoon. Slap me with the Bitcoin reality, you know. No slaps round here, bruv. Good afternoon, ladies and gentlemen. Just coming on before the New York Open. If it only was that simple, Crypto. If it was only that simple, Crypto. I see what you've done there, bruv. Sack trades, what's happening? What's good? What's good? We got moderators in here. Dutch, you in here? This is going to be for you, bruv. This is going to be about you, bruv. Mike, are you in here? Thad, what's happening, bro? Oh yeah, man, it's all good, man. Magic's what's happening. Mad love and respect for everyone passing through. Channel members, patrons, all the love across the board. Pattern watchers, where you at? Is Mike in the stream? Yo, can we just spam the chat? Mike Dutch, please. I need to know if he's in the stream. Yeah, man, it's all good. It's all good. Nathan, what's happening? Scorpio, what's good? What is good? Bella B, what's good? Just waiting for a few more people to roll in. It's that time of day, isn't it, ladies and gentlemen? Price action. We've had some nice little movements by Bitcoin. He's in his coffee shop. Where is he? He needs to be in here. He's not in here. No. If he pops up his name, guys, just... Where's he at? Luciano, what's good? Twisted Turnings, what's happening, my brother? What's good? All right, then, cool. Well, listen, he'll probably pop in a bit. So, ladies and gentlemen, today we're going to be talking about the basis of the New York session and what to expect moving forward. The question that's on our minds right now is this the continuation? Okay. Was yesterday's retrace setting up price to potentially move further? Okay. So if you are new to the channel, be sure to like and subscribe. Let's have a conversation, guys. You want a child from me, Tobias? What a guy. All right, let's kill the music. Let's roll with the flavor. So here we go. Let's just pull Bitcoin up on the higher time frames just to understand where we are at. So first things first, ladies and gentlemen, from yesterday's price action. All right, Bitcoin comes down towards the 50 EMA and tests it cleanly. All right, and that's a nice clean test by the 50. And all it's done right now is maintain that basis by moving away from the 50, as you can see right now. Now, let's go back to school. Here we go. When we see a W formation, all right, after price moves away from that zone, we naturally expect a retrace to happen. Why? Because it's at this point right here where we will understand that the formation gets locked. In other words, the accumulation by the market maker in this area here, all right, has now stopped. They want to realize a return. They want to come back up and take out all the liquidation points for all the retail traders that went short so that they can realize a return on their longs on the way back up, which is this basis right here. Okay. Is he in here? I was just speaking to the guy. Mad Love from Montreal, Russian news. Okay. Yeah, we'll talk about that in a sec. Anyways, so this is the peak locking. This is what we're waiting for. Bitcoin to lock its formation so it can come away from this accumulation zone. All right. And the principle says that it bounces from the 50 EMA and continues back up. That's what we are in principle expecting from Bitcoin right now. Now, you've heard me say it before, ladies and gentlemen. Okay. When Bitcoin moves away from a zone and we see this gap in price, as you can see, you've got vector candles down here. All right. Whenever you see that, you naturally want to assume that at some point they're going to come back to that zone. Okay. What we got to be aware of is this. As we are moving higher, the presence of vector candles are being recovered continuously, and then it moves away from that zone. So in other words, there's no gaps in price to the downside. Okay. Now check this out. Just stick with me on this one. All right. So if there's no gaps in vectors to the downside other than this one down here. All right. Why are they accumulating shorts and realizing a return on them straight away and then moving price away from the range? I'll tell you why. Because the narrative now is people are accumulating Bitcoin. People are buying, buying, buying. So in other words, the market maker has the luxury of being able to build shorts at higher prices. Okay. Now, depending on how long this move decides to roll out, the principle would say that on the 1 hour time frame, this would be a level 1 zone. Okay. Now, a level 1 zone can be as long as it needs to be. It's all based on the accumulation zone of this area here. Bitcoin could actually continue up and down in this zone for the next 2 weeks if it wants to. It would still be deemed as a level 1 zone. Okay. Now, this area here can't really class it as a level 1 rise because it consolidated in such a tight range. There was no attempt to try and accumulate more orders by moving price down lower to shake out retail traders. It was contained in a zone. Now we've got this nice clean test of the 50. Price is now edging upwards. 800 EMA and 200 EMA have now crossed. The psychological ranges where price could have come down to test that range has now rejected that zone. Okay. Now, the next thing that we are looking for to solidify this move is a break of this area here, which is the 45,612 range. All right. Now, let's have a look at the high block to see if there's liquidity up there. Well, look, at 44,980, there is $100 million worth of liquidations in that zone. 44,980. Okay. So all the way up here, 44,980 in this range right here. Okay. So they've hit those zones. They've taken that liquidity. At the same time, people were going long in that area. All right. So if we actually just pull up this area here, we are likely to see potentially some orders in that zone. If it's not present in here, it's in this chart right here. Close your eyes, guys. It's a bit bright. Here we go. So let's look into this zone right here. Send it to Uncle Tim, yeah? There we go. Mr. Dutch is here. All right, ladies and gentlemen, I'm going to be going into something, and this was done by Mike. So if you want to have any questions about that in the Discord, feel free to speak to Mike about it, because I ain't been in the game of crypto that long. I've only been for 1 year in cryptocurrency. All right. Mike's been in the game since Bitcoin came about. So here we go. Looking at this area, there is a lot of shorts being built here. Why? Why are people going short in these ranges? Which is justifying as to what's happening in the charts. People are in denial that Bitcoin can continue higher. That's why they keep on spiking price higher. Whatever narrative is used to get Bitcoin to move to a point in the chart, it doesn't matter. At the end of the day, it's sentiment. What reason do you have to come to the chart to buy? That's all the market maker in essence, or the algorithm, liquidity providers, whatever you deem them to be. Steve is the name that I like to see him by. Okay? But what incentivizes you to trigger that fear of missing out on an opportunity to get into Bitcoin before it goes to 100K? All right? You want to be one of the people that says, yeah, man, I got in at Bitcoin at 45. I got in at Bitcoin at 40. I got in at Bitcoin at 38. Yeah? We want to be focusing on the guys that are getting in at Bitcoin at 2,000, and those guys are the ones that are selling it at 45 and 58, for example. What I'm saying to you, there is a motivation behind why you're going to commit liquidity, because you can only commit liquidity if someone is there to provide it and match it for you, because that's the nature of the game of futures. Okay? Now, if any news about Russia adopting cryptocurrency or what have you, it's going to create an influx of people to come to the charts. When we look left, okay, we can see we got previous vector candles in the zone. Look at where the last vector point was right here in the chart. So if I move it forward for you, you've got this zone right here. They've come back and hit that. All right. They've come up to there, spiked it lower. At that point in time, that's where the market maker had initially triggered orders for shorts to the downside. Okay. And he built longs in that area. At the same time, price has come up here with people's interest to see higher prices. Okay. So the question remains, are we going to see Bitcoin break out to this zone and run free for the second level? Or is the market maker going to move price up into this range right here, reverse it back down, take some more liquidity, come down and truly test the 200 EMA and the 800 EMA before it initiates the true move back up? Okay? This is what we are waiting for. We're waiting for the level to confirm, because if price action comes all the way down, it will still be deemed as a level 1 retrace. The only time this movement up would invalidate the move to the upside is if price comes all the way down towards this zone right here. If it comes back down to 36, the pattern would still be in play, okay? But if it violates this area, then the formation or the zone of accumulation from here, okay, would be invalidated. If it breaks below the 32,800 zone, because that was the last peak, or should I say the last low that Bitcoin had bounced away from, which in essence was the market maker's attempt at building longs at lower prices because of the chaos of everyone believing Bitcoin was going to continue lower. So he had the sell liquidity to open his longs. Okay. Now, something that was mentioned. When I talk about trading, I'm more for about movements on the intraday. That's what it is for me. I'm a scalper by nature. I'm interested in Bitcoin moving from one point to the next. Can I see Bitcoin move towards the range daily high? I'm going to work out whether or not price is going to favor that direction, and I will take the trade based on the probability of it happening. Okay. Now, why did I make reference to Mike? So Mike's been in the game of crypto for a long time. If he's seen a cycling Bitcoin, he's seen it. Okay. Now, a month ago, Mike was talking about the idea that in the first week of February, things are going to trick to the upside. Things are going to start to get moving. Now, from what I remember, the reasons for it, well, everything's all over the place. You've got the Super Bowl, you've got crypto adoption, it's all happening. And we did say, well, Mike did say that we're going to come to a turn and see higher prices. What I'm saying, ladies and gentlemen, is if you want to understand more about the cycles, longer term cycles, Mike's your best shot. So forgive me, Mike, if your inbox is going to get hit up in the Discord, but I don't think he allows inbox messages. So in other words, if you want to speak to Mike, come to the main trading chat in the Discord. Now, that's not a setup for you to join the Discord. It's free to join anyway. That's where the pattern watchers are at. Be my guest, all right? But I just thought I'd say that because I want to recognize that Mike has said some things about this move to the upside based on the narrative of human behavior, how people behave during certain times of the year, okay? Because that's what it is. In his podcast, if you remember, he's talking about certain moon cycles and what have you, okay? So, you know, there is a basis to it, okay? Because if we jump back years ago in trading, now I'm talking trading stocks, all right? We jump back years ago, 150 years. There is a gentleman called William D. Garrett who spoke on the concept of torque analysis. And that means the pressure of the way price moves. And he makes massive references to cyclical behavior over the seasons. Okay, so during summer, we expect more movement because the sentiment of traders is positive. Let's take it now 150 years or so plus to where we are today. The nature of why price moves from one point to the next is based on people's narrative on how they're feeling about it. Do people think Bitcoin's going to continue higher? Naturally, they will. So they will come to the charts and start going long. Market maker will build the shorts. People don't think Bitcoin can continue higher and they want to see lower prices. They will start building shorts, as you can see. On that basis, market maker will start going long. He'll want to realize his positions in profit, so he will mark price higher to the upside. Now, there's various ways that you can translate the way Bitcoin moves. Quite frankly, I'm a day trader. I'm interested in the last 10 hours, moving into the last 20 minutes. What could it do from that point? So the key takeaway for Bitcoin specifically on the smaller time frames, even going on to the 4-hour time frame as well, if this move is going to hold precedence, because on the 4-hour time frame it's a little bit different. We've got the 4-hour 13 EMA holding in this range. Okay, just to be oh god. Oh, there you go. There you go. Yes, Mike does allow messages. My bad. My bad. My bad. Forgive me. Okay. Sorry, Mike. Where do we get these beats from? Just go to my Instagram and search for Ed Poster. Oh, no, sorry. Poster Beats. That's it. Go to Poster Beats. Now, listen, guys. It's not just an attempt for you to, go and hit up Mike with messages, but there is a narrative to it. There is an understanding. I will never dismiss the logic of the seasons or the cycles that happen, whether it's astrological or not, because at the end of the day, we react to certain things. Winter time, it's a suppressing time as such. It's cold. It's all of that. People react differently. Okay. Now, for me, okay, I'm looking at smaller time frames. That's my interest. Okay. If you want to understand a bit more on that, on the cycles and what have you, Mike's your best bet. Okay. So with that being said, guys, looking at the 4-hour time frame, you can see what's happening. Orders are being accumulated in this zone. All right. Very important that you understand this, which is what's explaining this spiky behavior. You can see they're triggering people to go long, pulling it straight back, grab their liquidity and try moving back up again. All right. Now, when you look at the 4-hour time frame, you think, okay, we haven't tested any moving average for a while. When you look at the 50 EMA, the 1-hour time frame, you can see that we've tested the 50 EMA and it's holding. But the 50 EMA is the 13 EMA on the 4-hour time frame. So again, you need to try and get into your mind which time frame are you trading off, and you need to give that fair amount of time to factor in price movement in that zone. See, what's concerning me in this zone right here is the fact that we've now rejected the daily open. Now, the daily open is extremely important. Why? Because when price is trading against the daily open and it's trading negatively, the sentiment is, oh, Bitcoin's going down. It's probably going to go down lower. People are going short. Then the market then comes all the way back up towards the daily open and triggers a positive day. And that triggers the retail traders who've been going short to get stopped out on their liquidations because they've been trying to catch Bitcoin to go short. Look at these wicks to the downside. 1, 2, 3, 4, 5, 6, 7. 7 attempts by the market to be pushed down lower, but the market maker comes down, hits those orders, builds his longs, and then pushes price higher. So pay attention to that, guys. Pay attention to the daily open, because the principle is it sets the sentiment for the next few hours. Look what happened at this Asian session. Right, they started positively towards the end of the New York session, going into the dead gap time. Tokyo opens, spikes up, everything's positive. Are we going to see higher price? They come back up towards this area here, no success. They drop it back down and set the precedence, and they give the retail trader the belief it's now going. So people are going short. We understand vector candle recovery. We expect it to hold in this range. They then reverse it back up, come towards the past couple of hours. They've now gone above the daily open. Okay, so it's in this area here that we can look to see when the sentiment of traders is going to change because of the anticipation of a positive day. Okay, You see the impact of it. Look at what happened on the smaller time frames. You can see that you've got move, consolidate, holding the range, market maker building his longs just above and below set. Yeah, building his longs below the key 44,000 zone in this area here. He keeps price low, then he spikes up to the upside, gets his profit, comes back to the previous zones where he knows buyers are going to be present, triggers the liquidity, realizes his shorts at the same time, and then reverses price. It is quite a treacherous thing when you see it on the smaller time frames. Okay, so on the basis that Bitcoin holds this area here, the next zone in the chart itself is by principle another zone where we're likely to see the interest from traders. Why? Because market makers have sent price up here, hit the stops, and then pulled back. Someone went long in that area there, guys. Someone opened positions. I can tell you roughly how many positions were open. So not in this area, but in that last move there at 6 o'clock in the morning, we saw, no, was that yesterday? Yes, that was yesterday. But last night, yesterday's move to the upside was what? $216 million worth of longs opened, and they just got had to the nines. The nearest zone of liquidity now, obviously that's not been taken just yet, or has it? Has the 44,900 has been taken? 44, no, that's the next zone of liquidity, which happens to sit at the last point where traders had originally gone long and tried to get profit to the upside. Okay, so it really does help you profiling the way price is moving on the lower time frames in order to understand the outcome of it on the higher time frames, because these moves develop. Yeah, are we cool with that, ladies and gentlemen? Are we cool with that? You see that though? You see that on the shorts? Look, those shorts. Sorry, brightness of the screen. I'm sorry. Look at the shorts being opened. People want lower prices, so the more that people's narrative of they think it's going lower is going to come into fruition, the more they are committing to the chart. So now they're building more short liquidations. Okay, that's what they're doing right now. And that's the way the market maker can build his shorts at higher prices, because on the move to the downside, he lets them, retail traders, realize their shorts in profit. And then when it's time for him to get his longs closed at higher prices, he shifts price back up again. So then he can utilize the same liquidity to open shorts on the opposite direction. That's why we have market makers, guys, because they allow that transaction to happen and be guaranteed of a fill. Okay, so here's that chart again. Where is it? Look at how many shorts are being opened in this area, and look how much accumulation of short liquidation zones we are witnessing in the chart. Remember, look, we got a bag load of long liquidation points right here. Okay, now what we understand to be as a lot of money, as you can see right now, there is roughly $24.5 billion worth of long liquidations in the chart. Okay, if market makers keep price contained in this zone, more shorts are going to open, which means he can go long. And when he's going long at lower prices, he will then mark price up higher. He will induce more traders to commit more longs in this chart. And then he will surprise us with a particular move that could actually wipe out all of these zones or take a good chunk of them before it comes back up again. Which is why people are probably going short in anticipation of price coming all the way down towards the 40k mark. So at the 40k mark, the market maker may be able to just tap some liquidity and take what? $10-12 billion worth of long liquidations? Because if he can do that at $10-12 billion worth of liquidations at the 40k zone, he can then mark price higher, take out more shorts, mark price higher, and commit, in essence, the liquidity that was here further up. Why? You can see how it's disappearing because retail traders are starting to pay themselves. Okay, so he now needs to make them think that you've missed out on this move. So they're going to probably put more liquidity in the chart, which will justify as to why they're holding this range, which is why when we're looking for cycles on the movement of the market maker, we want to understand if from the peak formation, rise level 1, rise level 2, rise level 3, peak formation. Okay, and then on the way down, rise level 1, drop, rise level 2, drop, rise level 3, peak formation in the zone. See, by principle, if Bitcoin is going to continue higher from this range, ladies and gentlemen, we need to look at it like this. We look back. What can we see? We can see there's liquidity. The next point of interest in the chart for me, ladies and gentlemen, is all the way up here at 52. Okay, that doesn't mean price is just going to explode to that zone. Before it gets to that range, it could move up slightly, come back down, move up, consolidate. It could actually do a nice little spike lower, V-shaped play, move up to the range, come down, make its nice slow trend, true trend move, and then a big push up, stop and rise, come back down, and that's when the pattern may actually reset. Now, the reset of the pattern will be reflected on how low they want to go back down for. They could bring price back down towards the 42 mark and then shift away again. Okay? This is the conversation you want to try and have with yourself when you're looking to project the way Bitcoin moves. Okay? And what part of the day, week, month are we whenever it gets to a particular point in the chart? Remember, each time Bitcoin moves, it's on the basis that people are committing liquidity. So have a look around you. Are they using news to induce traders? I bet today earlier on when Bitcoin spiked up earlier, you probably received a notification from crypto.com or Coinbase or any platform you're using. They are there to entice you to do something because the market maker can't make the market move if he's not got any liquidity for him to match it against. Okay, because he's not going to open positions against himself. That'll be stupid. You see what I'm saying? Yeah? Let's have a look at Ethereum. Just before I do that, what are you guys saying? Screenshot it. You guys have got it for later on. What's about New York when now we can see price moving down? They could stop, reverse to the upside. Potentially. We need to understand, okay, what it's doing in this range. Because when you look at the 1 hour time frame, you can see in essence they've spiked higher, recovered the wick and pulled back. It's this zone right here that we are waiting for the true incentive. Because look, they're recovering the vector candle. They're coming back down. They're not leaving gaps. The gaps they're leaving are very small. Okay? So if this is going to hold, ladies and gentlemen, we would need to see further price action. And it's in this area here where you will see the volatility. Because the principle is, if price moves up to this area and retraces back down and holds, the narrative would say that we are looking to try and move further away from the range, which is likely to be the case if they can break away from this range because they seem to be stalling. Okay? They can come down and retest the daily open if they want. Okay? That's the same with Ethereum, sorry. And the principle is the same with Bitcoin. Actually, with Bitcoin, it's trading below. All right? So forgive me for that. So Ethereum, in essence, let me go back to it. So Ethereum has actually started to make its move, but it's stalling. But Ethereum's recovering the green vector. So they're coming back, taking positions to move it back up again. Again, ladies and gentlemen, I'm not here to give you an entry or a signal to buy. No way. I'm here to get you to grant that decision for yourself. Why? Because once you understand it once, you're going to try and test it again. You may get it again. Then you might try it a third time. You might not succeed. But then you'll understand something from it. And then you'll say, you know what? I'm going to start spending a bit more time on it. And then naturally, you'll be doing it for yourself. That's the whole point of this. Okay? This is not, signal power, the way to put it for you is by me saying it's going to end up at one point in the chart. You just operating like a robot, committing your own liquidity on a whim. I'm giving you both scenarios to keep that in mind with your narrative of trading because I don't know what you guys commit in the charts. I don't know what your risk level's like. I don't know what leverage you use. And there are so many factors that come into play that only you can control. Okay? Can you look at the 9-hour chart? It looks like a good rejection on Bitcoin. Yeah? Let's have a look at the 9-hour chart for Bitcoin. All right, then. So look, they're pinning the 200 because people are placing orders in and around this zone. Now, I don't know if anyone uses the 900 EMA. I'm sorry, the 9-hour time frame. But the behavior of price action is pretty important. Why? Because you can see they're spiking up, coming down, spiking up, coming down. They're hitting people's buy stops and then building shorts from those buys, coming down, realizing return, and then moving away from them. If you notice the 2 pins to the low right here, okay, we would understand them to be, in essence, railroad tracks. Okay, so they are good little reversal points. Price has reversed from that zone, gone up. Now it's come down, but it's staying contained in this zone. All right, blue vector candle has been completely recovered. All right, and price has moved away from that range. Do they favor higher prices? All right, so we've got to really just understand what level of commitment are you going to place in the charts if you believe the narrative is to continue higher from this point? Bitcoin may even come down lower before it can go back up higher, because quite frankly, ladies and gentlemen, Bitcoin is in a small range. All right, 42,600, 45,600 right there. Okay, so about a 3K range. That's a small amount in terms of price action based on the way Bitcoin moves in a session. All right, so we're waiting for that confirmation that they want to shift out of the range. Okay. Would 2,850 be a potential bottom for long liquidations? Is that those boxes? How do you find that? What for Ethereum? Okay, let's have a look at what he's talking about. What time is it? 20 past 2. We've got the futures markets opening very soon, guys. Okay, so these boxes right here were for something else. It was talking about previous points in the chart. I think it was for when I was on the scalping particular points. There's vector points, I think it was. Yeah, vector zones. Yeah, so don't worry about that. Liquidations, look, liquidation points, 100x traders, okay, on Bitcoin, for example, they're very close to price. 100x traders, liquidations are very close to price. It's down here where the 25x traders are, okay, because they're putting up more margin to have a little bit more breathing room when they're trading. That's why when you're trading with leverage, ladies and gentlemen, you really have to be careful with the amount of money that you decide to use. Because if you have really tight stop losses with a volatile coin, even with Ethereum and Bitcoin, for example, if you want to try and preserve your capital and not experience any drawdown or get stopped out sooner than expected, you have to look at the coin that you're trading and say to yourself, well, what's the likelihood of them actually moving from one point to the next? When you zoom out, you can see what the behavior's like, okay? If you were to go long from this area here, okay, in Ethereum, and you saw a little bit of success, comes down, tests your entry, and then moves away from that point, but you don't decide to close your trade, well, you're going to have to experience these sort of moves way beyond your entry point, and it could go down further. But for 100x traders, their liquidation points are getting seen sooner than later. Just look at this chart. If we zoom in, right, on that big move to the upside right there, this candle, this time frame right here is based on the 1 minute chart. Okay, so by principle, look at that. $216 million worth of longs were opened in that zone. Okay, that is the liquidation point for those longs. That's the assumed liquidation point for those longs. Look at the entry and look at where it is in the chart. Okay, so that's for Bitcoin, man. Look at how close it is. Look at the volatility of Bitcoin. They had a chance to pay themselves. They didn't. So of this $216 million worth of longs opened in that area, split between 100x, 50x, and 25x, how close the liquidation point is phenomenal. Okay, where's your stop loss in that area? Because anyone on 100x is hoping for, in essence, a moonshot. They're waiting for movement to the upside. But if you are using high leverage and you realize returns sooner than what you anticipate, pay yourself, man. Because the idea is to try and give yourself a lot of freedom. Like these guys who were long from here and they got the liquidation points at 25x, they had plenty of time to understand the cycles in order to work out if they're going to go lower or not. But unfortunately, they marked it all the way back down to that zone and they ate all of that liquidation. And that's the sad truth. People don't pay themselves. And that's the basis of it. They keep liquidity in the charts because people need a reason to hold on to a trade. They don't want to miss out. And that's the problem in trading, guys. You know? What's happening here? Listen, it's not that fools use 100x. I use 100x. Doesn't make me a fool. I just understand how to exploit it. Because leverage is a double-edged sword. Because if you're not taking advantage of momentum and price isn't going in your favor, the fools that use 100x are the ones that stay in trades negative when they know they should be cutting out. When you're using a lot of leverage, your time to profit should be quicker, and that's the truth. it should be quicker. Now, if you decide to start adding more and more margin to your 100x trade, then you're putting yourself in a bit of a tricky situation, because you're going to need to put a lot more margin down to protect that 100x position. The less leverage you use, the less, or should I say, the more margin you'll put up front first. But then to really manage your expectations, you've got enough time to work out if price is going to go in the direction of wherever you anticipate it to be. So all I'm saying, guys, is just please, just be careful, man. You know? Yeah, you can have 125x leverage, guys, with no liquidation point. That is true. Okay? But to the average trader, that's what I'm saying. The average trader doesn't see it like that. He comes in with $100 at 100x, and he just puts the house down on that principle. And that's how he gets his account burnt. What I'm trying to demonstrate is how close the liquidation points are, which is where you're able to exploit the basis if price is going to go into that direction to take that liquidity to only move back. Ethereum's done exactly just that. Yeah? You know? Okay then, so, right. I need to ask for likes in the streams, ladies and gentlemen. So I've been ordered to. Can we please like the stream? That's the narrative. 1,600 of you are in this stream. Be sure to like and subscribe. You know, I don't know why I don't like asking for it, even though it's such a simple thing. It's just cheap, cheerful, happy days. But it's true. If you don't ask, you don't get. So, ladies and gentlemen, if we can match the likes to the viewership, that would be wonderful. Let's pump the algo, as they say, on that basis. Let's have a look at BNB. Well, what's going on here? Hold on a second. Hold on. Hold on a second. Steve, hold on. Wait, bro. Wait. I'm trying to do a live stream here, bro. Don't make the move yet. Give me a second. Give me a second. Give me a second. Steve is this market maker that I trade with, so don't worry about it. He's sometimes a good guy, and he's sometimes a bad guy. So today's been nice to us. Okay. On that principle, ladies and gentlemen, let's just have a look at Bookmap for a split second, just to understand where we are with our liquidity in the charts. Okay. Yes, we are away. We are at the daily open. Again, look at this. There's liquidity here by the market, right? People were going long on that basis. Have their liquidation points been hit? Full recovery of the green vector candle coming away from that zone. What's going on? Notice there's no gap. No gap for the red vectors. No gap for the green. No gap for the red. They're all being recovered. So something is being triggered in this zone. Look at that, man. Look at that. Mad love and respect to all of you. Liking the stream. It is simple to do. Okay. Let me get BNB up, because I know people want to have a look at BNB. Here we go. BNB price action. Mimicking what Bitcoin's doing. Test of the 200 is pretty decent, but it's still at the psychological high. That's really interesting. Still at this zone. If it can break away from the psychological high, we are likely to probably see higher movement to the upside. Could be that happens if they can hold away from the psychological range. Really important that it does that. Okay. Do I use volume profiles? Not so much. I mean, I'm not in the, for example, I'm not in a trade. If I'm scalping, I'm not in a trade long enough to really grant the utility of a volume profile as such. But these vector candles are based on the tick volume, so it tells me how often price changes in this zone, which is the narrative for them building shorts. Remember, because retail traders go long at the highest point, market makers go short from the highest point. Okay. All right then, so let's have a look right now. Let me have a look at some altcoins a second. Have I got the book map? Where's my liquidity? Bear with it a second, guys. Whilst that's working, let me have a look at some altcoins. Okay. So thank you very much. Thank you very much for the likes, guys. Thank you very much. And listen, how many people are brand new to the stream? I need to know whilst I'm doing this. Type 1 if you are new to the stream. I want to understand my audience. All right, then. It's doing it again. It's doing it again. All right, then. Here we go. That's why. That is why. Tell me it's that. Tell me it's that. No, it's fine. Okay, then. Cool. So let's look at Bitcoin on the exchanges over here. There we go. Our orders are going to make this quick because it does slow my computer down. All right, then. So we got liquidity. 101 Bitcoin in this range. Okay. Brand new. Okay, then. I think you're all pulling my leg here. You must be having a bubble here. Can't all be that new. Okay, check this out, ladies and gentlemen. You get access to these indicators on the screen. They're free of charge. Join the Discord to join with the community that talk about the utility of these candlesticks and the indicators, how to utilize them. They are free of charge. The Traders Reality website is pinned to the top of the chat. Okay? Simple process. Join the Discord. Subscribe to the channel. Download them here. Just click that and you'll add it as a favorite to your TradingView indicators list. Then you can add all this stuff right here. That's a paid subscription. Just Google HighBlock, check them out. Bookmap, that too is also a paid subscription, but they do have a free version. Check it out. Bookmap.com. Go and check those out. Okay? So, thank you very much. Here we go. Now, right now the liquidity is present in the chart. As you can see, look at these zones right here. They're static. They are holding this range. When you zoom in a little bit closer, all right, you can see the buildup of those liquidity zones. Now, look at this. See these little bits right here, okay? These are, in principle, the algorithm opening and closing orders for a particular player, all right? Now, let me show you something. There is a concept by the CME, written by the Chicago Board of Futures, and they come up with something called... When price does something, okay, it's called, in relation to the algorithm of trading, all right, you see this up here, right? If price is down, all right, as you can see, it's gone down, okay? This behavior right here, from what I understand about it and the guys I've spoken to, this is called ignition algo. This is the algorithm forcing price to a particular point. Now, I looked at this and I said to myself, well, how can I justify that? Look at this. This is a block area of trading where people are adding commitment to trades in Bitcoin in the order book. On this move to the downside, you can see that they had swept up the stops and there was absorption of limit buys of 11,964 limit buys absorbed, and then of course 3,660 limit buys absorbed in this range. Okay, could that have been the reason as to why Bitcoin moved up earlier on? So from 9:30 in the morning this happened, and then Bitcoin's result has moved up higher. Okay, so let's go back to Bitcoin for a second. 9:30 this morning, where was it? In this area here. Look at where they moved price down. So was that an ignition algo is in essence the algorithm forcing price to go to a particular point so it can be in line with what its intentions are. And now look what's happened. Now, I'm not saying that you're going to see that happen all the time. It's just that they don't graphically represent what ignition algo is. In essence, they just explain what it is, and it's this principle of like spoofs where fake orders are put in place or the algorithm forces price into a certain zone to obtain a certain amount of liquidity. Now, guys, remember, this what I'm talking about is only ideal really for traders on day trading. A holder may not really be interested in that if he's looking for Bitcoin on a longer time frame, but it's just for the guys who actually trade off or use the bookmap to really understand what those sort of things mean, so you can come up with a narrative and understand, well, if they're trying to force price down, what are the chances of it coming back away from that area? And then you use the candlesticks, you look at the area itself, and you say to yourself, yeah, there's plausibility that it could move away from that point. Okay? Are we cool with that, ladies and gentlemen? Are we good with that? I've heard my videos on 1.5. It's crazy. Thank you very much, Mike. I don't even remember to do that. You know? My neighbor told me 200K Friday Night Live. You know what? That'll be interesting. I mean, we've got projections going out the window of people saying Bitcoin to 100K in 25 minutes. Do you understand what would have to happen there? They would have to simply accept that Bitcoin will be legal tender in the US. Done. Happy days. That's where Bitcoin will go to 100K in 5 minutes. Look at what's going on in the charts, guys. Bitcoin's going up above the daily open. Isn't that ironic? Futures markets have opened, which is going to lead me on to the next thing to understand traders' incentive today. What are they feeling like? All right. So before we actually look at that, in order for us to understand which coins are going to move, we need to understand where the money's likely to be coming from and if it's actually going to go into coins. Okay. So let's have a look at, firstly, let's have a look at SPX. Oh, wow. There's a big gap up. Now, if you've been following the channel, you know that we've been waiting for them to close the gap in the charts. They've just closed that gap, ladies and gentlemen. I know you guys have been watching it. They've closed the gap, all right? Mini W formation, and now they've gapped up. That does mean that they could close this gap soon. But it all depends on the push from right now, because in the US right now, ladies and gentlemen, in the New York session, it currently is 9:30 in the morning, okay, 25 to 10. We usually get a little bit of activity at around 3 p.m. So give people till 10 o'clock just to get through to their trading desk, set their intentions for the day, and then they're off, okay? On that basis, if the stock market has gapped up and the sentiment is positive, all right, and Bitcoin's coefficient is in line with the equities, that would be reflected in Bitcoin's price action to the upside. So where's Bitcoin right now? Let's have a look. 1 hour time frame. Double click that. Obviously, I haven't got my indicator. There we go. So what's going on here, man? Anyway, you can see Bitcoin on that chart right there. All right. You can see clearly that it's moving up. Equities are moving up. Happy days. So the next thing you want to look at as well, ladies and gentlemen, is the yields. The treasury yields, the US government bonds, the 10-year yield is important at establishing traders, investors' sentiment. Because if cryptocurrency is in the adoptive phase right now and Wall Street are starting to get involved in crypto, you want to know if they're putting their money to the government, okay, for protection, or they're looking at seeking riskier assets. And as you can see, government is advertising higher yields. So traders are actually putting their money into riskier assets. When this rises, that's what that means. When this drops, it means traders are looking for safer havens, which will then lead us on to the idea of gold. Gold is currently rising to the upside. All right. It's holding the 50, but it's currently rising. We do have news placed today for the US dollar. All right. But it's not that much of a market mover, in my opinion. Now, when gold rises, it principally means that traders are seeking a safe haven. So it's good to get into this practice, guys, when you do come to the charts, because remember what we said earlier on. Traders will only buy if they are, in essence, incentivized to, and if they feel as though they can start taking advantage of movement to the upside or to the downside. Okay? And when you have that in your mind, you're in essence in line with the market maker's obligation to fulfill commitment of those traders feeling positive and that they want to buy. And then your goal as a trader is to establish how long of the buying will the market maker engage in before he decides to reverse price and take out all the orders that have been placed, no different to what they did over here. Do you see what I'm saying, guys? Yeah? This is how, in essence, you know, you break it down. I'm 36. I'm 37 this year. I may not sound like a boomer, but I do sort of behave like one. You know? Are we cool with that, ladies and gentlemen? Sentiment is the basis of why you traders will commit to the chart. And as you can see, Bitcoin is doing a great job of holding this zone. The daily open has not yet been clean broken away from the range. All right. You can see if you're going to trade off the pivot points, M2 pivot confirmation would imply price is likely to go to M4. But there is a lot of resistance nearby. So they would have to prove themselves to get to the M4 range. The question is, what point do you decide to make the entry? Well, you have to break it down to the lower time frames and understand the way they look to move price. Because at the end of the day, it's not about where's the entry point. It's about how much money you're prepared to risk. And what if you, when you do enter the deviation away from your entry, how much money is it costing you to wait until your trade is correct? I don't know that. Okay. So, ladies and gentlemen, coming into the first 20 million. Oh, by the way, I've just found out that we've hit 5 million views. I've hit 5 million views on the channel, ladies and gentlemen. That's because of you guys. Mad love and respect to all of you people. Mad love and respect. God bless you all and thank you very much for that. Listen, coming into 3 o'clock, that's when it gets funny. All right? Just be mindful. 3 p.m. usually is a time for activity. Okay? 20 minutes time. The futures markets are open. The US market's open. Everything's all up and running. We've got 2 zones of liquidity. That's the UK session and the US session. Be mindful of the UK close at 5:30 GMT. Okay? And be mindful of the US close. Those are 2 points in the chart where you're likely to get activity. All right? So just be mindful of those zones in terms of timing. Okay? Listen, congratulations to all you guys. You guys have made the community. It's you guys. You know? It's you guys that are doing it. The Discord is absolutely fire. We ain't got no toxic Discord. It is run by so many good people, man. Mike, Scorpio, Bitcoin, Infinex, Peshaw, B-Man, Sack Trades, all the guys behind the scenes of the Discord. I'm the one that causes problems in the Discord. I don't know how to operate the thing properly. You know? But anyways, mad love and respect to all of you people. Okay? So, if you are new, subscribe because I'll be going live tonight at 10 p.m. GMT. We'll be analyzing what Bitcoin has done from this session. Okay? So just be aware. We've got zones in the chart that if they can hold from the daily open, we are likely to come back up and recover those zones. Okay? If you're making trades, pay yourself because no one went broke taking the profit. Have yourselves a wonderful day. Mad love and respect to you. Take care of yourselves. Peace.